Hey everyone, welcome back to the channel. In this series of Market Vision, we will discuss on market updates and how should we trade it. If you are looking for this information, you have come to the right place. So stay tuned with us till the end of this video. Today we are seeing some strong recoveries and broad-based rallies across the globe. Let's break it down. First up, Indian markets have bounced back sharply. The Nifty is up 430 points, gaining 1.92%, while the Sensex surged 1310 points, up by 1.77%. After some recent volatility, this is a solid rebound, indicating strong investor confidence. Now let's talk sectors. It's not just the benchmarks, however, broader markets are shining too. Metals are leading the charge, which is up by 4.09%. Consumer durables rose roughly around 3.19%. Energy has gained 2.7% and pharma also climbed 2.4%. This shows a healthy broad-based rally, not just limited to a few heavyweights. And it's not just India, markets worldwide are cheering. Asian markets closed up by 1%. Europe is rallying up by around 2%. US markets are also in green, up by 0.7% as we speak. This global positivity is fueling the bullish sentiment back home. Meanwhile, oil prices are moving sideways today. WTI crude is at $61.42, which is down by 0.13%, and Brent crude is trading at $64.86, which is up by 0.15%. No major moves are seen here. However, with global markets rising, oil could be seen with more action soon. Now let's jump onto the charts to understand the markets as to how they are expected to trade tomorrow and what is the behavior that we can see. We are in the Nifty 50 indices. So as you could see, there was a sharp recovery, and then immediately after the Trump's tariff announcements, we saw a sharp fall. After this fall, immediately in the expectations that Trump would cancel or maybe extend the reciprocal tariff dates, that is when we saw an immediate sharp rebound that had happened in one single day. Since then, back to back, almost like 4 days, continuously 3 days, we have been rising. Now, even based on today's world markets, it is very evident that Nifty is expected to open roughly 1% up. Now, GIFT Nifty also suggests roughly the opening could be around 23,200, 150 to 200 odd levels. Now, immediately if the market opens positive, there could be this strong hurdle or this as a strong resistance where the market could start showing that those reversal signs. However, if in this first reversal it sustains and then rebounds back, then be assured that we will rise higher. So now let's understand from the larger time frame. We already have Nifty 50 expiry on 17th. So it is expected that we might not fall down or maybe trade in the range bound scenario from 22,800 odd levels till 23,500. So this is the range where we are expected to trade for this weekly expiry. So as long as Nifty is trading in this range, uh, there is no much worry either on upside or downside. Once Nifty starts crossing 23,500, then we might see a lot of positivity coming in, and the previous resistance of around 23,600, 700, 800 watt levels, this will be chased. So as long as Nifty is trading in this range, uh, we can be rest assured that it might not fall down, but there are high probabilities for it to start trading on the higher range. Okay, now let's talk from the perspective of open interest. So as you could see, it is very evident from the call wind up at the lower levels around 22,400 500 levels. There have been good unwinding of the call open interest. So this is very evident that markets are not going to fall below these levels because we have good support at 22,500 on the put side, because there have been good writing that has happened. And since the market is expected to open gap up to these levels, around these levels, so it is quite expected that once the gap up sustains at least at 23,000 levels, which is the round figure, then we might start seeing good sharp rebound on the upper side. And then at all the higher levels, if not maybe for this expiry, for 24th April expiry, surely we would be seeing Nifty trade in the range of 23,000 to 23,800 odd levels. So once we take support at 23,000 and above, then reaching 23,800 in one weekly expiry is not that difficult, provided if the world market cues remain positive, and there are no significant important decisions further taken on tariffs or any other major cause that could lead to sharp downfall. So as long as that is not possible, or that do not surface, we have high probabilities that Nifty can easily reach to 23,800 odd levels in 24th April expiry. So talking from the perspective of PCR, uh, overall it is zero point 0.8, and at the money it is 0.64, which is not bearish, but yeah, not positive as well. So considering the option chain interest and the charts, it is very evident that we will open at higher levels, and as long as 23,000 levels are sustained, is high possibility for us to start inching towards higher zones at each single day. So let's try and understand now what trades can we take. So as you could see over here, we have taken short straddle position. So four lots of put option because the momentum on the Nifty is strong, and we have taken the strike of 23,200 for 17th April expiry. So these prices are based on the closing prices. So as the market opens, these prices may change, and accordingly the overall profit scenarios would also change, and also the break evens could change. So as of now, you see we have hedged for the higher levels, because 10% rise in 3 days expiry um, sounds quite difficult to go, right? So we have probabilities of Nifty reaching until 22,300 to 400 levels. Even if that happens, then we would still be gaining roughly around a lakh. Okay, so if Nifty closes roughly in the range of 23,200, then this is the max profit that we can expect. So the probability of profit for this trade is 63%. The intrinsic value is around 93,000, and the time value, since it is only 3 days, it is 40,000. So the margin that is needed is roughly around 9 lakhs. So at 9 lakhs, if you are able to gain even 1 lakh, so that translates to roughly around 10 11 odd percent. So for a short expiry, this percentage of profit is really good. And downfall risks are limited because since the market is already in positive momentum, sharp downfall is not seen or expected. Anything can happen in markets, but considering the fact that global markets are positive, we have already been trading positive. So considering that the break even is 22,755, below these levels we might see losses. However, yes, as long as if market comes at these level, we can surely make the necessary adjustments. But yes, these are what the ideas from our side, and we would be trading it. If you want to trade it, you check your investment advisor accordingly. Now moving on to Sensex. So Sensex as well have shown strong rebound at the lowest levels of 71,800. From there, for last 4 days, we have roughly jumped around 3,000 odd points. And looking at the way how markets have closed on on Friday, we expect the market to open gap up, trade at these levels, which is the immediate first resistance of around 76,000 levels. And then if this level sustains, then we might surely see the market moving up higher. So as long as it starts trading in this range of 78,000 to 76,000, the lower channel, it is difficult to move down below 75,500 odd levels. So we have to closely track the market and see how the Sensex is trading for this expiry, which is on Tuesday, tomorrow, and then for the next last month end expiry. So given the fact that the overall world markets are positive, we might trade on the higher range of 78,000 to 76,000 levels. And also, since the VIX is on the higher side, so we do not expect any large volatility to come in, because if the indices trade in the narrow range, the operators will be able to capitalize on the premiums decay, which will help them to maximize their profits. So we might trade in the range bound scenario of 78,000 levels to 76,000 levels for this expiry, and also maybe for the next expiry, as long as there are no major news that are expected to come in. So let's see from the perspective of open interest. So on open interest here, this is in a deadlock kind of scenario where we have good support at 75,000 levels, and also strong resistance at 76,000 levels. But however, tomorrow itself we are expected to open at 76,000 levels, or try reaching 76,000 levels. So the behavior at 76,000 would be noteworthy, because there have been positions which have been taken from very long in the initial stage start of the month itself, for on the higher strikes. So now that markets are rebounding back, so if we start seeing unwinding of calls at the higher levels, that would be the first signal that markets are expected to further move up beyond 76,000 odd levels. So tomorrow's expiry is going to be crucial for the call writers, because they want to ensure and put pressure on the put writers, and at each levels give a good selling pressure, so that 76,000 levels are not taken down on tomorrow's expiry. However, post that we might see a lot of change in the open interest positions taken, and then we might expect the strong support getting added at 76,000 and below levels by the put writers, which in itself will be a strength, and then we might sharply start rebounding towards 77,000 and 78,000 levels. So from the perspective of PCR, it is overall zero point 0.9, and at the money it is 0.71, which is mildly bullish. Now on the Bank Nifty indices, Bank Nifty compared to Nifty as well as Sensex have been stronger. We were in the halfway from where the market started recovering back. And then there is a strong positive momentum that is already seen in the banks, majorly the private banks. So we might see strong rebound coming in, and this immediate resistance of 52,000 or 51,800 levels is expected to take down tomorrow itself. And once these levels are curtailed, we might surely start seeing Bank Nifty bouncing back at 52,500 and 53,000 levels in a short time period itself. And we would not be wrong to say if Bank Nifty will move towards or maybe above 53,000 levels by the end of this month's expiry. So let's now see from the perspective of open interest what it says. So as from the charts, it was very clearly evident that we are expected to move higher towards 52,000, 53,000 levels. And as you could see, at each 500 points, you could see on the call side we have seen already unwinding happening, right? So this is very clear signal that call writers are fearing that the bank nifty or the nifty indices would sharply move up by good buying signs that are expected to be seen in both private as well as public sector banks, which are part of bank nifty index. uh, the higher highs in those banks will definitely lead to good movement in the bank nifty indices, which will start impacting the call writers once it starts sharply rebounding towards the higher levels. So we would not be surprised that the 52,000 open interest might suddenly spike typically on the put built up positions, which will strengthen the support at each higher levels, and then we might reach to the 8 lakh to 10 lakh contracts on the put writing side too. And at the same time we might see at least for the 52,000 level strike, the call unwinding to reduce to back to 10 lakhs or maybe 8 lakhs in a day or 2 days time. So once that happens, that shows the good strength that market may not be falling below 52,000 levels. And if there are any positive cues that are expected to come in, further bank nifty is expected to move higher towards 53,000 odd levels. So now from the perspective of PCR, it is zero point 0.9, and overall, and at the money it is 0.82, which is strong. Now FinNifty, again financial services stocks as such have been showing a lot of strength. So back to back four positive candles in itself says that we are headed towards inching to 25,000 plus levels. So as long as tomorrow's positive momentum is sustained at 24,750 to 25,000 levels, then in no time we might cross the immediate 52-week high, which was roughly around 22,250 odd levels. So by the end of this month's expiry, there are high probabilities for FinNifty to cross its 52-week high, which is just 750 odd points down, roughly around um, uh, like 2-3%. That's it. From the perspective of open interest, here the open interest is mixed. The immediate first hurdle is going to be at 25,000 levels, and then later 25,500 levels. So 25,500 levels is again we would be crossing the 52-week high, and we already seen the small unwinding positions that are seen at the higher levels on Friday's trade itself. Now just imagine if we open 250 to 400 odd points on Monday itself, sorry, on Tuesday itself, and post that if it sustains, then in no time 22,250 and 25,250 and 25,500 levels can be easily reached. So we have to strongly uh, keep tracking and continue buying wherever we get better opportunities at the lower levels, because the strength in FinNifty and banking stocks comparatively to the overall broader indices is far strong and better in terms of the way how the charts have been looking. So from the perspective of PCR, it is zero point 0.8 and for overall and zero point 0.9 at the money. So this is again strong. So at least the financial services sector and bank nifty would be heading towards the higher levels immediately in 1 week span time. Now, lastly, we will talk from the perspective of uh, open interest and the FII DII data. So FIIs on index futures have been short by 1.01 lakh contracts. On stock futures, they are quite bullish with 16.26 lakh contracts been on long side. On call options, they are long by 4.32 lakhs, and on put options, they are again long by 5.22 lakh contracts. So net 89,606 contracts they are overall short. On the proprietary traders on index futures, they are mildly short by 14,152 contracts. On stock futures, they are long by 3.64 lakh contracts, which is mildly long. On call options, they are short by 69,432 contracts. On put options, they are short again by 65,866 contracts. So net proprietary traders have been indecisive. They are just holding short of 3,557 contracts. So no much positions held from the proprietary traders. However, now let's see from the retail side. On index futures, they are long mildly. On stock futures, they are quite bullish with 18.62 lakh contracts. On call options, they are short by 3.63 lakh contracts. And also on put options, they are short by 4.96 lakh contracts. So overall on index options, roughly they are long by 1.33 lakh contracts. So FIIs are short mildly. Proprietary traders are short mildly on options. However, retail traders have been long, and this long has been massively rewarded from last 3 to 4 odd trading sessions to them. So as long as DIIs continue to pump in money and be a strong bearer on the downside, this markets will surely not fall down and may sustain at those levels. So as you could see from the stock investments in the cash markets, DIAs have bought to the extent of 3,759 crores. However, FIIs have sold to the tune of 2,519 crores. So overall, there is roughly 1200 crores buying momentum that has been seen, and majorly this buying comes in the major heavyweights as well as the benchmark indices. That is when we had sharply jumped roughly around 2% on Friday's trade, and Gift Nifty also suggests a lot of positivity on Tuesday's opening too. So that's it on the markets update from our end. If you are liking our content, please do visit our website and see if it helps. You can approach us. You can also follow us on Twitter, Instagram, and Telegram channel. So our Discord server is also live. So if you want to see our trades and along with us participate in taking trades, join our Discord channel where we will live share all the details. That's it for today's update, and let's watch how the market is expected to perform tomorrow. Until then, thank you.